is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 28th day of March. Just one more day to go, and then we wrap up the candle. That candle right there, the March candle in the monthly chart, and we're going to look at them because yesterday I started talking about the consolidation that I think for the Dow has been going on for a while. Started at the 26,241 high of the 25th of February, ran down to 25,252, bounced to 26,109, slipped to 25,501. See how we got a narrowing? Let me just do this so you can see it much clearer. You've got a narrowing triangle, flag pattern, coming to an apex. It'll take a while to get to the apex. I'm not sure it's going to get to the apex because I think at some point we're going to test this line one more time, the uptrend line. Now it's at about 25,530 as support. Break under the 25,500, 25,372. That's what I should have said. 372. Right, 372. And I think if you break under 25,360, that's called, yeah, 60 over the next, going into early next week, then the consolidation starts to impact the weekly. So far, the weekly looks great. Now, I want you to do this because we're about to wrap up in another couple of days, just 2 days to go, 1.5 days to go, and then March is done. And that's to also with the buying. S&P's up about 12% or so far this year, and it started its consolidation a little later because it went to a new recovery high, and that was on, did I not write that? I thought I did. Well, I'll write it now. So that was at 2860, was it exact? 2860.31 on the 21st. 28. 2119, and I'm making that in red because this has given a daily sell mode notation, both in the Dow and the S&P. Parameters to watch: the close below 2783 at any point in the next 3 weeks would be next 5 days will be pretty negative, and I push into the 2836 area. It's going to be tough to do, but if it gets there, that will be good. Now, within the context of the S&P, I just had a quick question. I had a question. I don't know if it's going to be quick or not. Basil, if able, please elaborate when you buy or sell a USA equity index, S&P, New York Stock Exchange, Comp Index, Dow Jones, etc. Why do you focus upon VJIA and not another? Thanks for the explaining. Okay, I've done this over the years many, many times. I'm going to do it again right now. I'll tell you why. First of all, I had hand-drawn the Dow chart. I got it right over there somewhere, and it's huge because I had to keep taping these the engineering graph paper to make the charts when we're going up to the, 2700s, what was it, something like that, back in 1987. So I really go back with the Dow, but I did the others at the same time. But I really spent time on the Dow. Why? Because I was at that particular point doing Joe Granville's On Balance volume, and I had this notebook, and all the lines go right across like a legal notebook, and then I would draw vertical lines. And since I was not originally, but at some point in my life, certainly back in the 1980s, an illustrator, let's call it. I was a caricaturist and a cartoonist. I used to have in the Boston Globe, they have the op-ed page and the editorials, and they have op-ed, and they have these little cartoons. I used to do a lot of those over the period of time. Enough with that. The issue is I used to have this number .01 fine pen that I used to, a little Japanese pen that I used to use, not a ballpoint, but a felt tip pen. And I would, a tiny little print I would draw. I've got the book in front of me somewhere over there. I used to notate, I'd write down the XMI, the open, the close, the low, the high, in each one of the indexes all the way across. And I do a lot of the Dow, not all, but a lot of the Dow charts, and I do this unbalanced volume, all this work. And then I had this incredible buy signal at some point back in 1982. In fact, turned out to be the very day I got a buy signal, the day my daughter was born. And I, very soon after that, stopped using unbalanced volume until they turned it into an OBV, a price point that was measured in a single line like this. And I love it. I could never figure out unbalanced volume when I was adding them. You know what you do? Unbalanced volume is you total up all the, on an up day, you add that to the running total. On a down day, you subtract that from the running total. And all these different techniques gave me all these different ways of looking at the market. Hey, it's a long story. Maybe tomorrow, Techno Friday, I'll get into it. But basically, I've looked at the Dow every single day, as long as I can. Even when I'm in overseas or whatever, I'll try to get some news report on the Dow. If I'm out doing an errand, I'll have my cell phone out and I'll be looking at the price. I try to guess what the price will be based on the previous 10 minutes or whatever it is. So it's just a thing that I do, but I do the same with the S&P. I do the same with the Qs. Now, one of the reasons why over the last 2 years I've loved the Dow is because it's the first time it's like the XMI, which I used to love. Nobody talks about the major market index anymore. It's called the XMI. Here it is, dollar XMI. You can't get the back data because somebody must have bought it and they announced XMI instead of. Where did all my notation go for the XMI? Something happened here with this. Anyway, this is the XMI. And look, a single leg, A to the upside. Don't tell me it can't have a decent break. But the reason why I liked it is it had, like the Dow now, it had defensive stocks like Philip Morris, etc. But it also had IBM, I think it had GE, had DuPont, now it's Dow DuPont. But I like the Dow. I love the Dow now, except maybe it's got one too many financials. I think it's great. I think it gives me all the information. If I overlaid a chart of the Dow, the S&P, the Qs, there'd be minor differences over a period of time, but they're all going in the same direction. And I love the Dow because I think in this big coda phase that I anticipate coming up, I'm going to be talking about in my webinar on the 3rd of April, 5 o'clock for subscribers only. This is going to be an important one for a couple of reasons. But most importantly, I love the mix. I think it's perfect. It's not an industrial at all. It's just a perfect mix for me. It does everything I want. I mean, it has, Philip Morris, American Express, and now it has Apple. So it has Boeing, Caterpillar, Chevron. And maybe it shouldn't have Chevron and Mobil, but it has them both. ExxonMobil. It has Cisco, Coca-Cola, Disney, Dow DuPont, a mix of two great companies. It doesn't have GE anymore. It has Goldman Sachs, Home Depot. It just goes on and on. I like this. Maybe it shouldn't have two telecommunications like Verizon, but it has Verizon. And what was the other one? AT&T is not here anymore. All right, so it has Verizon. All right, I'll be back and we'll talk about the market. The Dow's down 44, S&P's -6, and I'll talk about why the signals that I'm getting at this particular point are very important, and I'll talk about.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So I don't want to get into all of that. I'm going to do it as I do the program. Maybe for once, I actually had it all organized in my mind, exactly what I want you to cover today. So I'm going to do that. I will get it between today and tomorrow. I'll cover the indexes because of the monthly chart. It's going to be so important tomorrow to be looking at monthly charts. But I had a question from Jimmy just as my show was finishing yesterday. His question was basically over, let's see. So the question was looking at, was that palladium? Aberdeen physical palladium. You want to know what? Here we go. No, that was Rogue Waves. There it is. Okay, so Jimmy. Hello, Mr. Chapman. You have to call me Mr. Chapman. Basil's just fine. Hope you're well, but thank you very much. Hope you're well and very much appreciate your show. If you'd be so kind to review PAL, P-A-L-L, Palladium ETF on your show, I'm looking for a buy entry, and the 327.19 candle looks bearish currently, 107.7. Looks very interesting to me, but note it will take a lot of time to get there if it does. Your opinion is appreciated. Warm regards and blessings. Thank you. Thanks, John. Okay. So the question is a good question. So I'm looking at this, and this was yesterday. I started to look at it. I can't remember if I did it on the show. I think I might have done it in one of the breaks, but then I forgot to talk about it. And it was like this. And I thought, oh, my. Because why? I did this when I did Larry's show, Larry Pesavento's Trade What You See show this morning. He'll be back tomorrow to do his show. But I was talking about, some of you might recall that about maybe 3 to 4 weeks ago, I think it was as this candle was being formed back on the first week of March with a high of 149.01, a low, round number low of 144. I was looking at it and I said, and I gave a whole bunch of reasons why, based on the techniques that I've developed for my 3 or 4 candlestick formations that I really treat with great respect. I discussed it, and I drew in this rectangle right here, and I said, I'm going to make it, I remember distinctly saying, remember, we're over here, right over, this is the middle chart, and I don't even know if we had started this candle. I think we were in this candle. And I drew it. I think we had just started. It was like the Monday or Tuesday, and we were right there. And I said, I'm going to draw this, but I'm going to draw the rectangle down towards the 9-period moving average and below the gap. So the two big gaps below that gap, and that's what I drew. I forgot completely about it. When I saw this yesterday. I'm not sure. Maybe someone had mentioned palladium, and of course I always go first of all to at PL, and then I said, oh no, that's platinum. This palladium I'm looking at, that's PALL. So I went there and I look, and there's this big red candle, and I'm saying, hey, wait a minute. I had written already about 3-4 days ago in my own work. I didn't discuss this because it's just what I do all the time. I do these charts. I discussed that I'd be looking at this, and there was 152.97 peak F round number high, cup formation. The right shoulder went higher. It's like a right arm extension, not a rogue wave. It isn't in one move. It's just a series of little doji candles, and it finally makes this top. It has a 150 round number low on the 21st of March, and then gaps down below it underneath the 14, the 9, and the 14 period moving average, the green and the black line. Hey, that's not good. And the MACD was fading, the stochastic was fading. So I wasn't surprised to see a gap down. I was amazed to see this kind of this is a voracious appetite for selling. Look at that. It gaps. This is a Murabanzi candle. No wicks. And it's very negative if you, very positive if you gap up and you close above it. Very negative if you gap down, close below. And lo and behold, there's an even uglier candle today, down 8.77 at 126.37. So your idea of 107, and I think you're looking at, let me just open this up to look at the candle. Yes. So your 107, well, first of all, 117 is the 200 period exponential moving average. It hasn't even been there. You didn't even have to know there were 200 period moving averages when you looked at the daily chart of PAL, because the last time it was there was way back. It was resistance, then support, and then became a liftoff level when all the moving averages, the 9, the black line, the green line, 9-period moving average, the 14-period black line, and the orange period, 200 period, broke above. And the MACD was good, and stochastic was good, and that was way back in 2018, back on the 13th of September, that area. So ever since then, you didn't even have to care about that. But all of a sudden, it's become an attractor. But I don't know yet if it's going to get there. This area that I put a rectangle in is going to be the area of greatest, for me. I'm going to actually do something right now. You see the way I've got it like that? I'm going to extend it by 1. Hey, what's going on? Uh-oh. There it is. Extend it a little bit right there. And let me just double check that I've got it on the right bar right there. And then I'm going to do this. I'm going to make it smaller now. I don't need it that big. And I'm going to lift it up there. And you know what I'm going to do? I'm giving it in TradeStation. You can do this. This is fantastic. I can go new parallel. I'll put it in right here. And lo and behold, where does it come out to? It comes out exactly to today. This is the day. And I'm making this green. Wow. I never thought. I love this. This is the low of 124 round number low before the takeoff in leg A on the 24th of January for the new big move up in palladium, PALL. So at 124, I'm going to the candle of the high right there, and that was 147 round number high on the 25th of February. I love round numbers. And then it makes a new high, 149.01 on the 26th. So that's like a silent candle. And all of a sudden, you get your high, it goes sideways, and it makes another extension to a peak F on the 21st of March, a month later, at 152.97. And now it's given it all back. And here's your left side, right side price time match with a plumb line right there. Right there. And today's the day. And who would have thought just 2 days ago when you were up at 145, 146, that in 2 days you'd be making the left side, right side price time match potential drop. So the 124 area, that whole area between 128 and 124, and you're at 120, hey, that can't be right. Yeah, 124 round number low, and this low today is 125.81. We're at the low. Sheesh. All right, so we're very close to at least an area where I think you're going to form a doji candle, have a little bit of a bounce, and then if we get a retest, that's going to be a big deal, because if you start to close under 122, that 117, I don't know if we're going to get there. I think the 119 area is going to be my target. So let's go one step at a time. Please keep me appraised to look at this. I do think that that's going to be an important area. I wouldn't be buying it right now. There's something wrong if it can go from 152 to 125 in just a week and a half. It's not even a week and a half. Something's wrong. And that, hey, is that part of the autos? What's Ford doing today? Oh, that's not bad. I don't know where it's coming from. I'll be right back. We've got a lot to talk about. Basil Chapman, Tiger Conditions Hour. Dow's down 60.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So when I was doing Larry's show this morning, I showed the E-mini. And I said the E-mini is, there were levels we were looking at, and we did it in live, real time, so we could see as it was unfolding. I'm just keep drawing down the line. Okay, got it. There you are. This one, yeah, grab it. There it is. Okay, so what we were looking at is there was this double top. It wasn't a double top because the show finished at 10. So we were just about, we were at that D, and I said we're very close. If there's a push much higher, then there's a chance that the peak E could extend a little bit in the 2-minute chart. Think of it as a daily chart, But if there was a break below, I can't remember what I said, if it was 28.14, I think it was 28.14, that would not be good. And so I left it at that. The 5-minute chart right here was about to go to, there it is. The 5-minute chart was an E. It went to an F. But what I had said is, because of what we're looking at, if the 10-minute chart, think of it as 2-minute, 5-minute, 10-minute, daily, weekly, monthly. It's the same evolution. If you're looking at that, it'll probably have to go to a D. Well, lo and behold, it went to a D at 24.25, and then it took a dive. That was peak E in the 2-minute chart, peak F in the 5-minute chart, peak D in the 10-minute chart. Look how the MACD turned down, stochastic in the 5. Look at this, the way it made that big Lamont type turn to the downside and then plunged to the low of the day. So far, that's 27.95 round number. Now it's trying to form some kind of a base. The reason why I'm mentioning this is that these are the patterns that we're looking at all the time. So you remember the double top we saw in the 2-minute chart, the peak D went to an E, and then the 5-minute chart, let me get it right, the D went to an E, and then pulled back and still went to an F afterwards. The 5-minute went to a peak F, and then you had to wait for the weekly to get to that D. So we're looking at the dollar, and the dollar has made this cup formation exactly on the dollar index. It goes to 97.71 the week of the 14th of December, pulls back to 95, runs back up and goes to 97.71. The pullback was actually very, very good because it didn't go down to the low. It stopped about two-thirds of the way down, and then 95.74, and then it ran up. So today's action is very good, and it's helping that monthly chart, but we have 1 day to go to see if March can go to the 97.72 level, which will start leg C in the month of March. Otherwise, we have to wait for it. It can do it in April. That's not a problem. But if it does it in March, it means we've already started leg C by the time April begins. And if it pulls back, watch at this point, 96.35, breaks under that, it's going to be a bit of a problem. So, okay. So if you look at the euro, look how terrible the euro looks. Euro is trading at 1.122. This is just not good. And the weekly chart is not good. The MACD is almost going to turn down again. Stochastic's flat at 28%. Not good, not good. And the monthly chart for the whole month of March, that is a horrible red candle. So I did discuss about this W formation, that by the end of April, the beginning of May, if this at 13%, the stochastic, because the price is rallying in the daily and then the weekly, can help the monthly chart. April, sometime by mid-April, what am I talking about? Mid-May, sometime in May, you want to see 1.152. Really, you must be up in the 1.15s, maybe 1.16s, and then the stochastic will be very positive because it'll form the W, very positive pattern, probably going to 20%. Otherwise, it's just stuck. It's not looking good. And if you're looking at gold pulled back to the down now 23. The 200-period moving average that I said was my target. If it broke 1303, 1300 support was 1291, and I said the 1287 area would be after that. But let's go one step at a time. Wow, this is red. Look at this, almost like an A to B equals C to D in the weekly chart. Made that peak in a beautiful. I love this. It was just it was part of the technique that I've developed over the years. But just the one that I was using right now for palladium. This is the same thing here. The 1353.9 was the left side. I wanted the right side to have a time match. It did that, and it got to 1356. So it went a tad above. There's the Chapman wave inside wedge target repellent line. It hit it exactly, and now it's pulling back under the 200-period orange line. This is gold contract that continues under the 9-period, the green line. Under the black now, but the week is not finished. Anything can happen between now and tomorrow. So the weekly chart at this point is underneath. It's at 29.93. and the 1303. That's how I got 1303 yesterday when I was looking at it. That's the 14-period moving average support in the weekly chart. So now I want you to look at, so this is what's very important. If you look at the IWM, see the weekly chart underneath with another day and a half to go, it went underneath, it closed underneath the 9, the 14, and the let's go though, just the 9 and the 14 period last week. Right now it's stuck right on those at 151.52. It's green, it's up 25 cents at 151.52, but you see this one is making lower lows and lower highs. What's the definition of a trend? A downtrend is when you're making lower lows and lower highs. What's the definition of an uptrend? Higher highs, higher lows. So I'm kind of concerned about the IWM. And if you look at the QQQ, and the reason I'm going there is because the Qs have semiconductors. It has all this key stuff that's in the XLK, and all of these are saying daily charts have probably made short-term tops. I've already got sell modes in a number of the indices for the daily. The weekly chart, look at this. The weekly chart of the XLK, the S&P Select Tiger Spider Fund, Tiger Select Tech Spider Fund. Nothing to see here, folks. Look, a little doji candle from last week's kind of doji-ish candle. This is going to be a very interesting to see. So I'm looking for the webinar that I'm doing a week from last night, Wednesday the 3rd, April the 3rd, at 5 o'clock to 6:30, a 1.5 hour webinar. You can sign up to become a subscriber to the opening call. You also get 2 webinars that I've done before. Very important webinars, I consider. And this one is going to be special because the first time I'm using as the title, anything goes. If you don't think this is a period where anything goes, I don't know where you've been. You've been under a rock or something. But this is absolutely the period of anything goes. I'll be discussing that as a socioeconomic, geopolitical. Really, it's a repetition of aspects that were in the 1920s. I discussed this yesterday. I said, isn't it ironic we had, you think we just had a scandal. Of course, we're going to find out that the scandal has a sub-scandal. But look at this. In the 1920s, there were even musicals based on scandals. Scandal of the 1920s by George White. Music by who? George Gershwin. Summertime. Okay, I'll be right back. Basil Chapman, Tiger Conditions Hour. Dow's up.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So, I just had a question about palladium. You see, I like to think of chart patterns as either straight lines up or down, cups or arches. There's an oscillation that's taking place all the time. Look, palladium at 841.70 down 20 right now, a serious move down, makes a low at, in August, the week of the 17th of last year at 769-ish, runs all the way up to about 988, 899, pulls back again, so it makes an arch, then it makes a cup, then it makes another arch, and now it's in the middle of the range at 842. It's trying to help the weekly, monthly chart form some kind of a base, but so far this is really not very good action. I was fascinated. I had a text, an email from one of our listeners, and he said basically, what did he say? He said about palladium, because I was talking about it and said I think this is what's used as for catalytic converters. I know that I was originally from South Africa, that's where I was born, and that palladium is something that was a big export. And yes, it goes into the catalytic converters. So he tells me there's a percentage of each. He says, I was curious, so I looked it up. Both are catalyst converters, about $35 each. I guess that's the amount that goes into an automobile. I'm listening from a ship in the Suez Canal. Next stop, Cyprus. Tomorrow. You are loud and clear. Thanks, Al. And I said, that's fantastic. I mean, on a boat, listening, I love that, because I know when I've been to Sydney, Australia, wherever I've been, always, of course, I do my show whenever I can, but it's just great to have the medium. What a nice medium to have, be able to do the internet through all these different facets. It's great. Okay, enough with that. What I did want to do, and this is going to be quite important. Now I want to go to these charts, because let me just show you. In the Dow is now up about 10, just chugging along in this tighter range. Every day is getting a tighter range. Look at this monthly chart. This is going to be very important. Let's just make this nice and big. We're talking monthlies now because March is about to wrap up tomorrow, Friday at 4 o'clock. So the Dow has this cup, and then it has, this is one of the most unusual patterns that I've seen in chart formations. It doesn't happen often. But I'm actually looking at monthly charts now where I say that a lot. So the Dow goes from 26,616 down to 23,344, the January high, and then we made that initial low. This is the only index that made a low in February and then retested and took out the low in April. It went to 23,344, 16 points below the February low. And then it made a beautiful walk the 9-period moving average and then ran all the way to 26,951, all-time high, October of 2018. And then it plunged. It did like almost a one-to-one from the left side, 26,600 to 23,344, and it goes plummeting down to 21,712. And then it has a V-shaped recovery. And that V-shaped recovery in March should have made some kind of a top and a more serious pullback if there was to be a failure pattern. Instead, the MACD is flattening out, but not good. It's flattening out and still very weak. But the stochastic, I'm going to circle this to show you because I can do that. We've only got a day to go in a monthly chart. There shouldn't be a pullback under 24,000 by tomorrow. You never know. But in the meantime, the unbalanced volume is pulling back. The stochastic's only at 61, but improving. That's big. And the MACD is just flattening out. It isn't expanding right now, but it isn't contracting. So that says to me, for me to call this anything like a blue A, meaning we've started a buy signal, going to a buy mode, going to a leg D, I can't do that. I probably won't even be able to do it if we break above 26,951. I want to see us, at least for 2 out of 3 months, trading decisively in the 27,000s or higher. So that's the monthly chart of the Dow. But have a look at this. The monthly chart of the S&P is MACD is not good. Stochastic's cross positive, it's at 57%. On balance volume is at a record high. Dow on balance volume is pulling back after making a high last month. It's pulling back. But wait a minute. If you look at the QQQ series, the on-balance volume is rallying nicely. Not great, but it's rallying. That's the blue line. Stochastic has crossed positive. The on-balance volume is, the histograms are just starting to improve a tad, but nothing to write home about. And this made a peak F, like number of the indices in the monthly chart, at 187.53, October of last year. And now look at this candle. This almost, if there's a pullback by tomorrow, it would have to be 177.89. Probably to make a doji candle, you'd have to see 166.33. But what I'm saying is that in the Qs, and I'm going to explain why I'm thinking this, the Qs are acting on the daily chart not that good. They're not breaking down, but the pattern says a close in the under 176 in the next week or so, I'd say in the next week, would be very negative short term. It might not impact the weekly chart too much, but it's something to watch. So parameters to watch. 167, yeah, 167.61 is the 14-period moving average. Absolutely key to hold in April. I don't care what happens. That if it goes under it, it's going to be a problem. Maybe of time, maybe not so much points, but it's going to be a problem. A break of this trend line, and I mean a real break, not just a pop to the upside and then it fails, of this triangle that's forming, this downtrend line, says that if the Qs in April start to trade in the 185.50s for one week closing basis, there's a real good chance now's the time that we go to 187.53 without a longer timeout. Next thing I want to look at, I don't have to go to New York Stock Exchange. I want to go to the active ones. So let's go to the IWM monthly. Big red candle. Red candle is a bit of a warning because the MACD is lousy. Stochastic is good at 44%. It's cross positive. It's okay at 44%. I want it up in the 70s or higher to really give it a strong influence to buying power. And the on-balance volume is pulling back a little bit. It does not make a new high as the others have done. And it hasn't gone above the August high of 173.39. And it plummets down to 125.81. Good rally, but now it's got a little problem. So this is the weakest as we stand. If in April at any point you start to see the IWM trading in the 161 area, especially 163, that's fantastic action. If it pulls back and starts to trade under 147, closing under 147 on a weekly basis, I think there's a problem both of time and price. Whoops, I didn't mean to do that. Now let me just quickly show you some things and why I'm looking at what I'm looking at. The IAI, which is the broker dealers. Look at this. Chapman wave inside track repellent zone. It gets all the way up and then it pulls back. I want to see at 58.03, I want to see this in April or May trading the 163s. It goes to the 163s, I'm sorry, to the 63s, 7 points high. I don't know what will do it. But if it can get there in the summer, let's give it the whole of the summer, it's going to be very bullish, and it's going to say the public is back. Otherwise, the public is there, but they're not back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. So we're looking at the 2-minute chart just because I love to show you the patterns that repeat over and over. So now we've got a larger pattern. Is it going to become the always two opposing patterns, at least two opposing patterns? You've got to decide which one you want to follow. So this says there could be an arch formation, another little failure right here at 28.11. It came off the low of 27.95, round number low. Look at the way you've got the ictus, that turnaround in the on-balance volume. You've got turnaround in the stochastic. You've got a slight bump down in the MACD, and then it went right back to positive. And on the left side, you can see the Chapman wave automated resistance points of 28.11 and 28.12. It spirals through that and goes to the 200-period moving average at 28.12. That's going to be very, no, that's a 5-minute. Okay, so this is going to be important because if it breaks to the upside, because this is the end of the month, you've got buying coming in each hour of the day. Money comes in and they've got to put it to use. Most of the time, when you in this situation, my impression is, if I'm correct, I don't know, I haven't seen statistics on it, but my impression is that fund managers tend to go straight into an ETF. They don't go into individual stocks at this particular phase when they're trying to put money in, and then they start to figure out what they should do. So they build up a nice kitty. So this is going to be very important. See how it's stalling right here? Stalling. Okay, let's just make it real simple. I did that earlier on Larry's show. I was talking about it. I'll do it again here. Now that the parameters have changed just slightly, I'm going to say to you that in the in the VIX index, which is now at 14.94. We're at 14.53, I think it was, so 48, something like that. When I was doing Larry's show 9 to 10 this morning, I said if the VIX between 110 and 220 this afternoon, if the Dow is up 60 or more points and the VIX is down below 14.30, that's going to be suggesting that the rally could last to the close. If in fact the Dow is given back the gains that we were making at that particular point and was only up maybe 20 points or 30 points or even negative, and the VIX index had spiraled into the 1510 or 1530 area, that would say, uh-oh, another stalling day, probably closed at the lower end of the range, and that's the way I'm looking at it. So I'll be back tomorrow. We're going to follow through, but I'll also be back with Tom O'Brien this afternoon. Have a great day. Check out my April the 3rd webinar coming.